I'm Safie Russell from SDR Consulting Inc., and we're here today on Business Basics Friday. The goal of this session is to provide some value to small business owners in the space of tax, accounting, and general business, and then have an open Q&A at the end.
All right, welcome everyone. Welcome. Happy Friday to you all. I hope all is well and you had a great week. Welcome to Business Basics Friday. If you're here live on Facebook, I want you to go ahead and share in the comments where you're joining in from. I am joining from Valley Stream, New York, and it is surprisingly warm at 56 degrees, February 10th. I can't believe it, but I will take it. So share if you're joining in, where you're joining in from, if you're here live or on the replay as well. And so I'm going to go ahead and get started, make sure technology is all squared away. So welcome again if you're here on Facebook Live or listening in on Clubhouse. All right, perfect. Looks like we're all set. So welcome to Business Basics Friday. I'm Safietou Russell, founder and CEO of SDR Consulting Inc. Business Basics Friday is a weekly session catered to providing valuable information to business owners. We have a variety of guest speakers that may come in, and sometimes I just share as well to educate you in the many areas of your business that you may need to manage. This is strictly for education and informational purposes. There's no client relationship or paid consultation here, providing specific advice for your situation. SDR is not liable for any use of information provided today. As far as my background, I've been in the industry 20 years, and I'm a CPA and enrolled agent, also have a master's in taxation. And SDR Consulting Inc. is a virtual firm based here in New York, but we do service clients all over the US. And we mostly work with business owners, especially mental health professionals, helping you reduce your concerns regarding tax and accounting so you can focus on your clients and most importantly, your own well-being. So today, I am going to be doing a live CPA Q&A session. I have some questions that were submitted in advance, so thank you to everyone who submitted questions, and time permitting, I may take a few more at the end. So if you do have questions, you can go ahead and put them in the comments in Facebook or in the chat here in Clubhouse. And if time permitting, I will get to them at the end. And if not, guess what? I'm going to do another session next week. So stay tuned and feel free to share this with a friend. Seattle, Washington is plugging in here. Thank you for sharing that. All right, so we're going to go ahead and get started. I'm going to pull up some of the questions that were submitted already. So let me just switch screens real quick. And once again, go ahead and put comments here, questions here in the comments if you do have any that I am able to answer today on the fly. All right, so the first question I have here, I'm just gonna go ahead and read these out. And so the first one says, I own a mental health counseling practice. Can provisionally licensed interns be employed as 1099s? They are able to set their own schedule. They provide their own laptop. I provide the EHR system. They use my office space, and they provide their own clinical tools based on their specialty. However, they are not independently licensed. Other practices hire them as 1099s. I want to make sure I'm following the IRS guidelines. It's a very good to get this information up front. First disclosure I want to mention is that you want to be sure to coordinate with a labor attorney and or an HR specialist to go over your specific situation. But one of the resources that's out there is known as the IRS 20-factor test. And in my course, Expanding Your Practice While Minimizing IRS Red Flags, I do cover some of those 20 factors. So you can check that out at sdr.teachable.com. However, the main things that the IRS looks at are behavior and control. And you want to keep in mind that your state guidelines may be different. So, and even your state labor guidelines and even your state professional licensing guidelines could also be different. So you want to make sure you're covered against all odds. And so I actually had an attorney, Scott Horton, a couple of weeks ago who went over this topic as well. So definitely check previous episodes of Business Basics Friday. He gave very detailed information about this. One thing that you'll find is that an independent contractor and then the word provisionally licensed or someone pretty much needing supervision, they're oxymorons, they're total opposite, right? So provisionally licensed therapists need supervision, and so a contractor is independent. That's one of the factors you want to really consider. A contractor is someone who is in business for themselves, usually contracts for multiple clients, provides all their own tools, has all the knowledge they need to do their job independently. And when you think about them using your space and EHR, et cetera, are they paying a fee to utilize that? Is it being provided for free as if an employee situation? And IRS, from what I've heard, they kind of think of contractors like the plumber that comes into your office and fix the pipes, not a therapist working full-time in your practice. So I can't give you a yes or no answer, but I do want to encourage you to look at those factors. Google IRS 20-factor test and look at those 20 factors and look and see if that scenario of them being a contractor is a fit for that situation. My personal opinion, you're safer having that person as an employee because number one, they're not fully licensed, which means they're not likely in business for themselves and they can't operate independently. But I would definitely verify that with a labor attorney or HR specialist. That is a hot topic. It is very industry wide that people automatically hire therapists as contractors, but I very much caution you to hire correctly, the right status for your staff, because the cost of making this error can be very damaging to your practice. And oftentimes, the liability arises because the staff may have had an issue, maybe they left your practice, maybe not on good terms, and then they go to the state and file an unemployment claim. But the state says, wait, we're not getting unemployment insurance for you as an employee. And so that's when the digging starts. And so to prevent things like that, it's always safer to get the proper guidance up front from the proper resources, which would be your HR specialists and labor attorneys. All right, so I won't dive too deep into that. Next question here. My biggest struggles are knowing what I can and can't write off from my LLC. I'm a mental health therapist and I'm stuck on what I can write off. And another popular question. So I want to encourage you, if you haven't already, to make sure you grab my ebook for free, 12 Overlooked Tax Write-Offs for Mental Health Professionals. And you can get that at www.safierussellcpa.com. I'll drop these links in the comments later on. The main thing with being in business, regardless of what type of business you run, is that your expenses, are they ordinary and necessary to run your business or your practice? You're in private practice or group practice. It is very ordinary and necessary to have an EHR system. It's required, right? It's very ordinary and necessary if you rent an office space to have to pay rent, to buy office supplies, to have a printer, etc. These are things that are very ordinary. It may not be ordinary if you work from home only, providing telehealth, and then you purchase a car under your business and you don't drive on site to see clients. Is that really ordinary and necessary for your line of business? Those are some of the things that are looked at in the event of an audit if an IRS or state comes in to look at your expenses. I want to encourage you to review the Schedule C form, which is the most popular form that most business owners are filing if they're individual sole proprietors or single member LLCs. The Schedule C lists out several different expenses, and then there's room to add additional ones. So at a minimum, you want to look at that Schedule C, look at the expenses on there in terms of the category names, look at your expenses in your practice or your business and see if they apply to you. And that will kind of give you some guidance on what you can deduct as well as a business owner. But working with a professional, in my opinion, is going to be your best bet, a professional who works with business owners, who knows your practice, who knows the type of common expenses, and more importantly than even having a professional is having good record keeping, because you can only work with what you have, right? So if you have, unfortunately, maybe you're a sole proprietor and you don't have a separate bank account because you may not be required to, and you have a mix of personal and business expenses all over the place, it's going to be more difficult to identify what is a business expense and if you can write it off if everything's all mixed up. So my suggestion is always have a separate bank account, whether you're required to or not, and use that bank account or business credit card for all of your business related transactions. And then once you have a system in place to help organize those various charges and deposits, then you can work with a professional to determine, is this right? Can I write this off? and how can I write it off, right? So there's tracking of the activity, and then there's sitting down and discussing how it can be written off, because there are different rules for different things. For example, entertainment since 2018 or so, no longer deductible, but meals are, and meals for 2021 and 2022 were 100% if they were in a restaurant. In the previous years, it was 50%. So these are the type of things where, okay, I have the expenses, now what do I do with them? That's what you want to work with a professional on. And you want to take someone to dinner as opposed to taking them to the Beyonce concert as an example, because not that Beyonce concert would be deductible anyway, but because it's entertainment, it's definitely not deductible. All right. So I hope that helped answer that question. Let's go ahead and move on to the next. How do you change your tax filing with the IRS from sole proprietorship to corporation, and what is the deadline? So in order to be a corporation, whether it's an S corporation or a C corporation, you first need to have an entity. So for example, an LLC, or you have an existing corporation. If you're just a sole proprietorship doing business under your own name, you can't convert to a corporation. You need to have an entity first. All right. Once you have that entity, let's say it is an LLC, and you start your LLC, and then you go through the analysis to determine if an S corp is a good fit for you, specifically for your tax profile. Then the form 2553 is the application to apply for an election to be taxed as an S corporation. Your entity will remain an LLC, but you will be taxed as an S corporation. And the deadline for a timely filing is March 15th. So we're in February of 2023. So if you want to be an S corporation for tax purposes this year, 2023, you need to submit that application by March 15th, 2023. And there are ways to submit it later in the year, but it has to have certain verbiage on there, which in most cases is also allowed as well. Certain states have a separate S election, so New Jersey and New York that I know of for sure. And so you want to be sure you're doing both of them. And some states charge late fees for late filing of the election, i.e. New Jersey. Okay. So if you're an LLC, that's how you transition to an S corporation. If you're an LLC and you want to transition to an C corporation for tax purposes, you would utilize Form 8832, and an entity classification election, and that is to change your default tax classification. And that is also a March 15th deadline. All right, so that is how you make that transition. If you don't have an entity already, you want to do that first. And then you want to definitely make sure that before changing to a corporation, you fully understand what that looks like for you and your practice, your business, and your life, right? When you have a corporation and you're working in a corporation, you are required to have a salary for yourself and be an employee of that company if you want to take money out. If you just want to work and let the money sit there, I wouldn't recommend that either, because some of the states will frown on that because you're working for free. But you're required to be an employee of the company. This requires a state employer registration, unemployment insurance, some states workers' comp, paying yourself a reasonable compensation, whether that be a C or S corp, different criteria for each one. And you want to make sure that you're prepared to have a payroll service handle your payroll so that they can file your quarterly payroll tax returns, as well as deposit your taxes timely and minimize the chance of having penalties related to payroll. So a lot goes into a corporation, maintaining it in terms of the compliance. And so you want to make sure you are prepared for all that before diving into that. You don't want to dive into that and then just treat it like a regular entity, sole proprietorship or LLC, because corporations have a higher level of standard. So make sure you do that analysis with a professional to determine if a corporation is right for you. And if so, those are some of the steps you would take to get that in place. And I'll be honest with you, if you have a corporation, please have bookkeeping in place. Just don't do it manually. Okay, you have a balance sheet you have to keep up with, and your profit and loss statement. It's a lot more detailed than a sole proprietorship or even a single member LLC. So bookkeeping, payroll service, reasonable compensation, make sure that all of that is factored in, and seeing if a corporation is a good fit for you. All right, next question. So I have formed an LLC, however, I'm not doing business through it yet due to licensure requirements. I was not allowed to take deductions for my license expenses due to this fact. Is that accurate? I'm going to answer this generally, right? So generally with any business, you can't deduct the cost of obtaining a professional license or degree. So I started my business after I was already an accountant. Let me think. I started my business right around the time I transitioned to a CPA, but prior to that, I was an accountant. I was a sole proprietor. I couldn't deduct the cost of, taking a CPA exam, for example, through my sole proprietorship. You just can't. You have to um, eat that up as a personal cost now that you are actually capable and able to run your LLC with the proper licensing and, requirements and criteria already met. Going forward, you can deduct your ongoing training, professional development, CEUs, and things of that nature. But if you go back to school and decide to get another degree, that's not a business deduction. There's different deductions for school expenses, but additional, add-ons, certifications, things like that. These are things that you can likely deduct through your business once you're up and running and once you're fully able to run your practice legally due to your licensure restrictions. Okay, so I hope that helped. Next question. So can therapists or group practices write off payments not received? Clients who may use vouchers and it doesn't cover the full rate, can you write off the difference? Can you write off the difference for reduced rate services, pro bono, etc.? And so I'll generally just answer that with, unfortunately, no. You cannot write off what you have not received. This also applies if someone doesn't pay you for services. You provided services, you billed them, they never paid you. You have to go after them personally, legally, to try and recoup the funds. You can't write off what you haven't received. So someone uses a voucher, your rate is 150, the voucher is 90. You just pick up 90 as income. You can't write off the difference of what you did not receive. All right. Same thing, insurance, you bill for one rate, they pay you X amount. You just pick up whatever they paid you, and you cannot write off the difference between what you billed and what you were paid. And if you volunteer and provide pro bono, bless your heart. And it's great that you do that, but you cannot write off the value of the services that you're providing. All right. If you volunteer your time for like a nonprofit organization, you can't write off that time, but if you have expenses related to the travel and, supplies or something that you purchase related to that volunteer work, you can count that towards charitable contributions, and you would have to have enough to be able to itemize deductions to take that. So sorry to say, you want to make sure that you are working with a biller or handling billing and on top of maximizing the most you can get if you're dealing with insurance. And with clients, wherever prepayment is an option, you may want to explore that so you're not chasing after the fact to get money. And if you are accepting vouchers or doing pro bono work, just keep in mind that whatever that difference is that you're not receiving, you cannot write that off. So you want to be able to make that income up elsewhere. Okay. Hope to help. We've got one more question and we'll open up if there's any that have come in. If not, we'll wrap it up till next week. So last question is there a way to access a 1099 if you haven't received it? So we're now at February 10th, 2023, and 1099 NEC forms were due by January 31st to the IRS, and also the recipient just had to be placed in the mail by that date. So depending on where you are, you may have received them later than that date, but you likely probably would have received them by the 10th if they were timely submitted and mailed out or electronically delivered to you. A 1099 NEC is going to report the income you've made as a contractor or service provider for another business. And if you made over $600, and if you were paid in a way that wasn't through, for example, like an invoicing platform with a merchant account, you were just paid maybe by Zelle or cash or a bank wire or check or ACH, then you will likely get this form. However, it's important to know that if you're in business for yourself, if you're a contractor, you want to make sure you're tracking your own income from each, client that you're working with, each company that you're working with. You want to have a system in place to do that. And you want to compare your totals to what is going to be reported in the 1099 if you receive it. This is why it's important to do your best to wait for it or request it if you haven't received it and let them know that it's late. And so for the person that's supposed to issue it to you, follow up with them first. Do your best to try to get access to what they're going to report, because what they report to the IRS is what the IRS is going to look for in your return. And some examples where their number may be different from yours is that if you receive a net deposit into your business account, but maybe fees were taken out ahead of time. For example, let's say you truly are a contractor, you work for multiple group practices, and they charge you to utilize their EHR system in their office space. They charge you a fee, it comes out of your payment before it comes to you. The amount that's going into your bank account, if you're just relying on that amount, that's not the gross amount. That's not the amount that gets reported on your 1099. So if you pick up that amount and then they report the gross amount, there'll be a mismatch, which could result in notices from the IRS or state in the future, 2-3 years down the line when they catch it. So hopefully you have some type of pay stub or statement that may show that breakout so that you can gross it up yourself, pick up the gross amount, and then deduct the expenses that are being taken out. That's the proper way to report that. If you don't, you want to definitely coordinate with them and confirm how much, even if they don't have the form ready, which they should, at least how much they're reporting that you've been paid. So once again, you don't want to rely on any client, group practice, private practice that you may be contracting for to tell you at year end in January what you made. You want to have your own records. I came across someone who used a third-party platform and felt that what they received on their 1099 wasn't correct. And they did have access to pay stubs or statements showing prior pay periods, but it only went back 5-6 months, not the full year. So they had nothing to really verify what was on the 1099 versus what they've been paid throughout the year, and they didn't have their own independent records. So then how do you fight it? Right? So you want to make sure when you're in business for yourself, you have your own independent records of how much income you're earning, and you want to definitely have access to some type of statements or stubs if fees are being taken out. But most importantly, as an independent contractor, a true independent contractor, you should be invoicing your clients, right? And I know everyone's situation and practice is set up differently, but most independent contractors bill for their services. They send an invoice, whether it be through a payment platform or a paper, and this way you know how much you're owed because you're telling your client how much they owe you. All right, so that's something to consider as well. All right, those were the questions that were submitted in advance for today's CPA Q&A session. I had fun, kind of looking through those questions. This is actually helpful for me as far as like preparing content for you guys and sharing. I want to make sure that you have access to all the resources. So depending on where you're watching this at or listening to it at. So we have my Facebook group, SDR's Tax Tips. That's S as in Sam, D as in David, R as in Robert. SDR's Tax Tips. That's my Facebook group where I'll post additional tax tips throughout the week. In addition to this weekly Facebook Live session that you're watching called Business Basics Friday, we have access to my free ebook, 12 Overlooked Tax Write-Offs for Mental Health Professionals. You can access that at www.safierussellcpa.com. I'll drop that in the comments here. Whether you're here on Clubhouse or Facebook, and also sdr.teachable.com. You can find 2 courses there. One is called Business Startup Basics, and the other one is called Expanding Your Practice While Minimizing IRS Red Flags. All right, so I hope this was helpful to everyone. I'm going to go ahead and sign off. If there's no questions, I want to thank you for your feedback and that this was helpful. Thank you for sharing that. And I will be back next Friday. Enjoy the rest of your week. Make sure you do something for yourself this weekend. It is Self-Care Friday. All right, everyone, take care and have a great day. Bye-bye.